want to share two things. So first of all, one funny comment is we have one of our private equity firms that has partnered with us before, and we showed them Grand Riviera and we said, yeah, we're doing pref on this deal. And it's actually at lower leverage than what we originally wanted to do on a bridge loan. And so the funny thing is in my eyes, it's because we're doing the pref route, we actually have lowered the risk of the deal because we're going cheaper cost of capital, lower leverage. Same or lower leverage, right? But this private equity firm basically has a new policy today that's no pref, right? And I think that, and they admitted, they're like, yeah, I know this is not smart of us, and this is
He was not thrilled by it. He was actually, this is stupid. This should be a rare exception where it shouldn't. He was ready to greenlight it and put all the equity to us. But
it happens.
man,
Life happens. But the reason why he felt it was stupid and the reason why we agree is because, again, it's that whole thing that I just explained. Like, pref itself is not evil. You have to know what the all-in leverage is. So if you're borrowing pref, yes, that is supplemental leverage, and supplemental leverage is more risky than not using supplemental leverage. But if you're grossing up leverage to 70%, that's not necessarily any riskier than just using a senior loan that's at 70% leverage. So that's a little bit of an inconsistency, but it's funny because it's exactly what you're talking about, which is recency bias. People have been burnt by bridge loans. People have been burnt by pref recently, and that's causing them to not be able to look forward because they're stuck looking in the rearview mirror, even though today is the day to be taking advantage of opportunities in the market and to be slightly turning more aggressive. And one other anecdote is there was an investor that flew in to Houston, I think last weekend, and I met with him, and he was in town because he was working on a deal here that is one of those unfortunate situations where the equity's wiped out. And this is a situation where the sponsor borrowed bridge and pref. So this deal is levered to the moon. It's like an $80 million deal, and I don't know, they put in like $6 million of equity.